YouTube? Welcome to the House Money Investing channel. In today's video, we're going to go over some of the some stock picks that I have, some of the gains I made today in the market. Should be a quick, short video, and then I'll make about 17 trades or 18 trades after midnight, and show you my profits, principal I'm taking out, as well as some house money plays I'm making. If you don't know, my strategy I'm using for this challenge is me basically deploying money into the market over a 30 to 90 day period, at the same time pulling out my principal I put in the market, leaving my gains inside the market, which is what I call a house money. At that point I consider it free stock with zero risk, because I leave those gains in the market while getting my principal back, and those gains are just compound and add up over time. I don't have to worry about it. I can just leave it sitting there for the long term. Doing this every 30 to 90 days, I'll steady add to my positions. Now here on the screens, Fundrise, they actually sent me an email. I guess they got some more properties, in a different location out in DC, Ohio, and things like that. Fundrise isn't really a part of my house money strategy, but I do have a Fundrise account, so I thought I'll talk about it briefly. If you don't know, Fundrise is basically like a REIT, but they're a private REIT, so they're really investing in real estate that isn't on the market for the average consumer. So on Fundrise, you can start with $500 up to $100,000. The first 3 to 5 years, you cannot withdraw your money. You can request to. They can deny that, and if they do approve it, they will charge a fee. So I would advise you, if it's something you can, if there's some money that you can let go for that long, I would advise you to do so. It's just another exposure to another side of real estate and investing. You do have REITs in the regular stock market, like Realty Income, for example, and other ETF REITs that you can get into. But Fundrise, to me, it's just more exposure, so that's why I chose to do it. And they're just showing me some properties, stabilized apartments, and you can go into all the details and stuff like that. Apartment renovation. So what they do is, if they renovate this apartment to sell it, when they sell it, you get a percentage of the profits. Same, if they're charging rent, you'll get, those monthly dividends every month as well from the rent. It's another apartment renovation. And then here we have NTLA. When I checked it earlier today, these were my current gains, which are $37.35. It's up 177.84%, and this play is all house money, so it's all free shares and stuff like that, which is probably about almost 3 shares, I would guess, since the price is $19.22 is what I paid. It's almost $60, and this, as you can see, since the purchase, it's just been running up. So like I said, small amounts can compound and become larger amounts. Some stocks I was looking at today. I'm not going to go in depth about the stocks. I'm not going to look at the balance sheets, the technicals, or anything like that. I'm just going to give you a quick glance at the tickers. You can do your own due diligence if you would like to, and look up these holdings and these positions. I have faith and belief in all of them for several different reasons. And I just thought I'd show you what I have. Usually I screen record from my Facebook, but I'm in Facebook jail right now, so all the notes and stuff that I usually keep, I wasn't able to do that today. So I'm just gonna briefly browse through them for you guys to take a look at what I'm looking at, what I added to my watch list. This one here is a ETF for clean energy, which is electric vehicles and stuff like that, which their main 2 holdings are Tesla and NIO. So for their track record, that this is a good ETF. So this is a position you can grab, hold for long term. You can see there's only 503,000 people that know about this on Robinhood, or that are actually in the position. So it has a lot of more potential to go, and it's something I have faith in as well. Brookfield Renewable, this is in the energy sector as well, and this is going to be a great play for the renewable energy. That's the expanding sector right now that is blowing up. the oils and stuff like that are, they're going down, and the renewable energy is going up. You got PEJ. This would be a nice play too. As you see, the volume is super low on this one. This is a nice play, nice long-term growth stock. Then something everybody's familiar with, Domino's Pizza. I was looking at their balance sheets and stuff like that, and they're looking really good. As you can tell by the share price, they're obviously doing something right. They're up to $386. Still has a lot of more potential to grow. And then Fox, of course, everybody knows about Fox, or you should know if you've ever had basic TV or cable TV or anything like that. And I see a lot of upside for this company as well. Chipotle, I've swing traded Chipotle numerous of times. I do own shares or fractional shares of Chipotle, and this is a very good play. A lot of people probably don't get into it because it's so expensive, but hey, just buy a fraction of a share. It doesn't matter if it's 5% of a share. You can dollar cost average your way in and steady build your position up until you actually get a full share, and at the same time riding those gains for Chipotle, which has a great business model and is very profitable as well. And then Cisco, I own shares of Cisco as well, or fractional shares. This is something I swing trade quite a bit. These two I just recently added to my watch list after after looking at the current state that they're in. I've been watching them and haven't added them to my watch list, but now is the time to get in. I'm going to get in them next month and try to swing trade them for a nice house money play. Then you got Young Brands. I own fractional shares of Young Brands as well as Yum China. Great business model, super profitable, low overhead, and this is a nice play to get into as well. Then this is a pharmaceutical company. This is the MJ play. Everybody knows psychedelics. MJ is the next sector to boom. The economy needs the revenue. The next president says that he's gonna, he's backing the legalization of it. It's getting decriminalized and all that good stuff. So MJs will blow up. Their sales on MJs from 2018 to 2019 went up like 45%. So it's going to keep growing. So these MJ plays are something definitely to get into. Canopy Growth, Aurora Cannabis, Planet 13, Telray, stuff like that are the main ones that everybody going for. But these are kind of the off the grid plays that you can also get into. Raven Industries, same thing, nice play. Pretty good price on the shares. Got a lot of potential, guys. Redfin. This is in comparison with like Zillow and things like that for the housing market, and this has a lot of potential as well to keep growing. The real estate market is crazy at the moment, but as things start to get back on track with the vaccines and all that stuff coming out and the economy getting back to the way it used to be, this is a really good growth play. Then I have Spotify, one share I bought in my Webull account back on the 20th of November. Purchased it for $261.40. It's now worth $344. So you can see I'm up 31.60%. So I've gained a total of $82.60, and it's not even been a month. And what I'll do with this play is swing trade it. So the $261.40 I put in it, I'll take that back out, put it in my bank. The $82.60 I'll leave in Spotify, and I'll let that just compound and build up over time. So as you can see, with me making these swing trades, I actually can make a decent little profit on some of these positions, and accumulate some gains and principal as well. Then back to NTLA, jumped from, I think it was like 32, now it was up 40, worth 61.10, up 190%. And like I said, this is all house money, so you see how fast it just grew within one day, and I actually own a little bit over share of this. So just compounding and holding this for decades, who knows how much money I'll make off of that with no risk. VSAT, it's also a good play that you guys can get into as well. You can type in that ticker name, go to the description, read the news on it, all that good stuff. You'll see what I'm talking about once you look into it. Of course, we got Airbnb, right? Airbnb IPO today. Had a crazy run up to about 160, dropped down to 144. Still, it was up 112%. This one I'm gonna wait to get into after the hype. With all new SPACs and IPOs, there's a hype run up, and then a major sell off. Then it's gonna consolidate, and then after that, you can kind of get some technical data on it, and then be able to look at the charts for it. And this one is actually still in a bullish momentum, so I believe it's still gonna run up again. Who knows how much or for how long, but Airbnb is definitely a good long-term play. They have pretty much no overhead. I mean, they don't own the real estate they're renting out, so it's pretty much just all profit for them guys. Similar like Uber and Lyft, they don't own these cars that these people are driving around doing the services in. They're just charging fees, so the overhead is super low. One I did add, but I don't know what happened to it, was DoorDash. DoorDash IPO'd yesterday, ran up about $20-$30, and then consolidated. And DoorDash, as of right now, is a great play. Once the robo-taxis hit from Tesla, and they already have some in China, once those robo-taxis hit, who knows what's going to happen. You're going to have, cars with no drivers driving people around like taxis, like Uber and Lyft. And, they're probably going to start delivering food. They'll come up with some way for these cars to deliver food without a driver. And the people that own the Tesla, you can buy your Tesla, let it robo-taxi for you. You can go home, go to sleep, send your car out, make some money, pick you up, go take you to work, send your car out again. So the car is going to basically pay for itself. So I see a lot of people purchasing Teslas just for that passive income. And then I also see a lot of people using the services because it's going to be a lot cheaper than all the other services. Plus, there's going to be a lot of people on Instagram and Facebook and Snapchat and everything else, recording themselves, car picking them up with no driver, driving around with no driver, stuff like that. So we'll see how it goes. Like I said, I'll drop another video after midnight. I might go ahead and drop me a video and go through my Acorns account. If you like the video, please like it. If you like the content, go ahead and subscribe and ring the bell if you would like to follow my journey and keep up with what I got going on in my investment strategy. You don't have to use the same strategy I use. You can use whatever strategy you would like. I do have other brokerages, private accounts with dividend stocks that pay me monthly, quarterly, annual dividends, as well as I have growth and value portfolios as well, and they pretty much all have these same stocks in them because they're high quality A1 stocks. So you don't have to use my strategy. If you do use my strategy, you don't need a lot of capital to do it. If you got more capital than what I'm using, you can do that as well. But just pay attention to the stock, the ticker names, do your own due diligence, look over the stock, and keep up with the channel.